perfect storm for Russell to do well. What's beautiful about the mega cap companies like Apple and Amazon is they can fare just fine if interest rates don't come down, or, ideally they want to see growth. But my point is they are not as sensitive to all the same factors. The Russell are smaller companies that need to borrow money to grow. They are sensitive to the rate at which they have to borrow money. That being said, I think that there is a possibility that we may see a little bit of a soft landing, and I think it's possible. I'm in that camp. I haven't seen evidence yet that tells me otherwise. I will say that a possible warning to me would be if we see a 50 basis point cut in September. I don't want to see that. I would prefer to see a 25 basis point cut from the Fed. A slow and modest rate cut process could give us that 1995 environment. Now, I'm not saying that's a certainty, but if that happens, I want to be long the Russell. And I think that the Russell has a lot of room to the upside. Let me show you guys where we are at on the Russell. With the S&P 500, we're like 3% off the all-time highs. With the Russell, from current levels, we are still about 10% off the all-time highs. That gives me a lot of room, if I'm right about this, for the Russell to not only catch up, but it probably needs to take out the highs if it's really going to quote unquote catch up with the performance of some of these other indices. If you see a good growth acceleration environment, which is a tall order to fill, it could be very, very positive for the Russell. I like the risk to reward on this. These companies have low expectations set for them compared to the mega caps. I like the Russell trade. I've got a long position on it. If something changes on the probabilities of a soft landing, I'll probably get stopped out. That's the reality of it. But if soft landing continues to be a possibility, an increased possibility, I could be wrong, but I think the Russell's insanely cheap. We'll see. I want to bring someone else on this conversation. We got Chris Pulver, who's going to join us in just a moment. Before we take this quick break, thanking our sponsors. Guys, remember, today is the last day to get our 35% off discount off of the Discord signals. If you'd like to get updates on all trades that I'm taking, you can follow along with what I'm doing in the markets inside of our group. We've got the link for that dropped here in the chat. Send a direct message to our team right now if you'd like to join for that huge discount while we take this quick break to thank our sponsors, and then we'll be joined with Chris Pulver in just a moment. Stay tuned, guys. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right. I'm coming, Chris. I'm behind this barrier. There I am. Hey, Chris, how's it going, man?
What's up, dude? How are you?
Hey,
Happy Friday.
I'm glad to have you on because I feel like Fridays are fun in a certain way where they're like, we don't have so much data we got to push through and talk about so rapidly. So I wanted to kind of talk shop for a second on this
Sure.
idea with the Russell, because I know you've been on the Russell train for a little bit as well. What are your thoughts on the Russell right now? Do you think, I know you heard a little bit of what I was saying there.
Mhm.
Do you feel similarly? Do you feel differently? What are your thoughts on the Russell?
So I mean, I think the Russell still has the best opportunity for a catch-up trade. We're about to see, how strong this market truly is. I'm not quite, convinced yet that we're just going to see all-time highs right away after, I mean, it's not going to be a 2-week recovery, but it's been a 2-week recovery. By 3 weeks, does this thing just keep ripping to the upside? I mean, one thing that we keep talking about, you and I know we've talked about this offline quite a bit. We're coming into a period that isn't historically bullish for the market.
No.
So I did a video yesterday and I talked about it a lot last week. If we pull back to 70%, which is where we are at. We're just around that 70% handle. So this high to low swing, we pulled back 70%. A lot of times when the market gets to that number at a 70% pullback, to me, this is more of a wedge that could be starting. And it would
Mm.
make some sense to me that the market would just have maybe a sluggish, not necessarily bearish, but a stall or a sluggish September. If the and one thing that we mentioned too, Nick, is what does the market do when the Fed actually cuts? Is this a buy the rumor, sell the news situation where when the Fed actually cuts in September, has the market topped out? And I don't think that's necessarily the case, but for the Russell to get to all-time highs, which I'm still playing, by the way,
Hmm.
we have to see everything go up. So what we haven't had this entire year is we haven't had the SPY and the Qs and the Dow and the Russell going to all-time highs. We
Yes.
had the Dow hit
Mhm.
all-time highs earlier.
Yeah, they've
We had the
taken their
SPY and the Q.
turns.
It's been like a fragmented index where it's one or the other, or the Qs and the SPY are pretty much the same now because it's heavy tech and it's your top 10 or Mag 7 stocks. But the Dow is its own island, the Russell's its own island. That weird rotation we saw in late July with the Russell that poked up during FOMC and then ultimately just gave it all back. I mean, I'd like to say that it's still a good value play, but we have to see growth out of all the indexes. We have to see, sustained bullishness out of all the indexes for the Russell to get to 244, 245. Look, I'd love to see it there, but I
Yeah.
realize that my trade is, I want to say the trade that I took on the Russell. Let me go ahead and bring one of these accounts up here. So Russell trade, IWM. What do I have here in the money? Has I got that in the money? Actually, this expires today. I'm gonna have to close this one out, dude. 1346, and that's trading for intrinsic. All right, that's fine. My trade that I'm in, I have a 240
Hmm.
by 270, and then I have a 245 by 270. So I'm trying to get from this 200 area, 210 area. I'd love to see this thing at 240 because I paid very little for that option, but I'm hoping that if I get it to be at the money or close to it, then I turn what was my debit on this one? 240. Let's go IWM here. So I turned where's my debit at? Okay, so a $7 debit could be trading for like $20 to $30 if I get something in the money.
Yeah, and see
So that's a trade I'm willing to take.
the thing that's interesting to me with the Russell
Mhm.
idea in general, Chris, is that you just mentioned how it's on its own island. There is this possibility where we enter, maybe we just go back, let's rewind 6, 8 weeks ago, where it was like 2 week period where tech and megatech was down
Yeah.
and Dow stuff and the defensive stuff was just getting bought. There's a possibility that we do enter this rate cut thing, and as you're talking about, there's like the uncertainty about the S&P. Maybe we do go back to the highs. Maybe the market gets shaky up here,
Yep.
and it's a tennis match where it's like, well, are we going to get good rate cuts or bad rate cuts? Or, well, we know we're going to get rate cuts. Meanwhile, what does the Russell do on rate cuts? It just goes up, right?
Yeah,
It
that's
just
true.
it doesn't care it wants to see the economy do well, yes, but it really a known factor for the Russell is that if you get a lot of rate cuts, it's at least a positive thing for it, right? So you got the rate cut story, which is arguably just good for companies like the Russell, which especially their price to earnings ratio is much lower on average than the higher names.
Hmm.
The S&P and Nasdaq, they can debate endlessly as to whether or not rate cuts are going to come in slow or fast. Russell might just I could see an environment where we get a couple months where tech is just kind of like this, and Russell actually has a little bit of a catch up, not by necessarily everything is good and everything is ripping and small caps are ripping the most. That's possible, but maybe you get an environment where everything else kind of just chills out and the Russell just kind of has a good period because rate cuts are coming. I don't know. Could be something to think about.
Well, what we have seen is that it's very capable of going way faster than the other
Yes.
indexes. I mean, we could see 15 or 20% upside while the others are maybe returning single digits.
Hmm.
That's very possible. So for us to be sitting here at 212, and looking at 212 up to 240, that's a 15% rip to the upside. We could have the SPY or have the S&P and the Nasdaq just returning maybe 3 to 5%, but the Russell could absolutely get that 15% level, hit the all-time highs. I mean, for me, that's my target. I don't know if I'm really holding small caps longer than that because that to me is a good
Sure.
measured move. But I'll say this: let's clean up my charts. My charts are super messy right now. um, if we go to, let's go to this guy here. Ugh, I got way too much stuff on my charts, Nick. Um, let me try to get something clean. All right, here's one. All right, so let's go IWM and let's zoom out to the weekly. What we are not seeing right now is lower lows. So I will give the Russell the benefit of the doubt and say, unless we break this low, I'm still going to be cautiously optimistic, cautiously bullish. It was a awful setback that we saw from that sell-off in
Yes.
July, late July, early August. It was a terrible setback for the Russell. But did it do any structural damage? No. Not right now. So I mean, we came right back to the same level at 197, but it saved itself right there. We're about roughly 50% back, pulled back on that sell off. Now I want to see, okay, if we just high low kind of chop around in here, we're going to see if this market can still make another thrust and move to the upside. Because if it does, we're talking 240, 245, and it's just higher lows, higher lows, higher lows. A lot of volatility, but it still stays the course with higher lows. So technically, it's not broken. And like I said, I'll give it the benefit of the doubt until it proves otherwise.
And to add to your concept about the speed at which the Russell can move, guys, why are we even paying attention to the Russell when we could be talking about S&P, NASDAQ, gold? I know there's people in the audience who are thinking that, but listen to what Chris just pointed out about the speed of this thing. When it makes a move, let's rewind the clock back to late 2023, where Goldilocks actually looked very real. I fully bought that story. I was wrong about it, but it looked like we were going to get a smooth, consistent 2024 of rate cuts throughout the entire year. And at that time, employment was heating up. Like employment was solid, and we saw inflation cooling at the same time. That's the sort of environment where, good old baby Russell, you put a spoon in its mouth and it does incredible. Look at what happened. It was up 27% in a few short weeks. It was insane. That is 64 days. It was up 27% at an index level. Obviously, that's after a big drop. But the point is, and I think a lot of people might have gotten really disappointed to what you just talked about, Chris. There was like this, there it goes again, Russell up 14% in a few weeks. Rotation trade is in, and then boom, we got smacked with a little bit of humble pie, and Russell came all the way down. Probably scared a lot of people who are just throwing up their hands. I'm done with this. I'm not waiting on it anymore. But I'm telling you, and as you just pointed out, when it makes its move, we'll see all-time highs at the blink of an eye at some point. It could be now, could be a year from now, but when it happens, I'm pretty sure it's going to happen very quickly. It won't be like a gradual, like we're going to grind 1% very, very slow at a time.
Right.
It'll be a rapid jump. And some of these big days for the Russell, let's think about this. Russell on a good day is up better than 3-4% in a single day, which at an index level is pretty wild.
It is wild, and that's the exciting thing about it. I mean, I would feel a lot better about my 240 and 245 levels if we just get past 228. But yeah, I mean, again, like I said, I'm just gonna. I had a lot of kind of discoveries this week. I was frustrated with immediately going to defensive mode, putting in some hedges, out to August, out to September. I had a good conversation this morning on the yen pairs. Let's switch over here. Let's finish up on the Russell. I'm going to keep the Russell as is, benefit of the doubt. We haven't done any real technical damage to the downside. And then let's just keep it clean on the SPY as well. Have we done any technical damage to the downside? You can look at this and say no. I mean, we actually are sitting here with a higher low after a 10% correction on the SPY. We haven't done any technical damage to the downside to take out this low from April. Now, could this mean that we go, up and up and up and up? I mean, there is something called a 3-drive pattern, which if this is 1, 2, 3, 4, 5, that could set up our turnover, bearish pattern coming in later. But that's probably something that happens in, Q1, Q2 of 2025 and beyond, when it's like a whole new batch of problems versus what we have right now. So, the SPY looks pretty clean right now. I would like to see just an acknowledgement that we don't just have a instant V bottom, which this might be in my career one of the only V bottoms that I've seen without the Fed having something to do with it.
Right. That is an insane move. We talked about that a little bit yesterday, just over DMs.
Yeah.
Chris, I want to add something to your thought there with the S&P too. Here's the weird thing about, and this was more of our discussion that we had through DMs yesterday, just the idea that like, okay, so as you mentioned, the 3-time pattern, that 3 push, if you get another push, what I think that takes us into and this is just a secular guess that I've been talking about, and you and I have discussed this all year long. We talked about, is this just going to be a wild melt up year where you kind of just have to hold on to your butts, and then
Yep.
it turns into a 2021? I think if you get that craziness happen where we just rip through the highs, I think we enter into the final era of a bull market,
Agree.
which is the far out risk curve thing that I always talk about. Basically, the idea is that during the first waves, people go to what they know is like a stable bet. They buy like technology. 2023 was the year of tech massively. The year two, they start getting into, financials. They start getting comfortable with rounding out the full market. But whether it's, I'm not saying year three is not what I mean, but like the next push, that next wave of a bull market, especially with the trajectory that we have been moving in, I would not be surprised if rate cuts start to happen. We see going out, buying houses, people buying crypto, money starts flooding in from those money markets, and we see the final wave of a crazy bull market, which is crypto, unprofitable tech stocks, the ARK Invest, 101. We might enter into that era, and it is a frustrating era because for me as an investor, what that means is I get to do nothing, because I told you this, Chris. I have a personal rule I've talked about on YouTube. I only like to buy stocks when they're at 10% plus off on the S&P 500 level, which is a rule that is really nice when it works and really frustrating when you can't buy anything. So I might just be trading it for a while and riding it off a cliff of whenever that happens. But I definitely don't claim to know where the top of this move is. I just think it's worth thinking about, like, if we get another wave higher, is it kind of like an annoying thing? Yeah, it's like this market has no chill, but maybe we just enter the frenzy final wave of risk on environments.
Yeah, I think that's very accurate. We have talked about maybe 6,000 as an achievable profit target for the year. I mean, we're sitting here at we were 18+% year to date, correct, from the highs we saw back in July. If we get up higher than that and we enter into 20 some percent, I mean, I think from the start of the year, if we went up to 6,000, I want to say that's like right at 20, maybe 23% for the year. Let me try to get this on the this is a weekly chart SPX. We're here at the beginning of the year. So I know that we had like a wild 1.5% pullback to start the year. But right in here, if we go to 6,000, 26% in the year. We've had several years.
Yes.
I mean, my gosh, we probably had maybe a half a dozen in the last 20 years that we've had 20+% on the index. So it's not far fetched to think that with an election year, with kind of the soft landing, the Fed gets it right, they thread the needle, we could definitely have a 20+% year, which means, I mean, I know you trade a lot of tech and you like the NASDAQ. I mean, we could see 30+% on the NASDAQ.
Yeah.
But as we get to those levels, it's hard not to think that, I mean, again, the dumbest thing is to call the top, but I think the next potential leg lower is not going to be a V bottom type move, because we've had a pretty crazy stretch. And I know you and I talked about this offline. I think what frustrated me this week is just thinking about this market just can't have steady anything. Like from 2018 to now, it has been booms and
Yeah.
busts and booms and
It
busts
has
and
no
highs and
patience,
lows.
instant gratification
Ugh,
only. It is
so bad.
frustrating. Like, and
Yeah,
that's the thing, Chris, is if we
yeah,
take out those highs from, as you mentioned, where I'm positioned, obviously I'd be happy because I'm long tech and
sure.
SMH and all the, but from a investing standpoint, frustrating, because it's like this market never has, 2022, I got to say, I mean, was a painful year for me, but also at least it gave me a chance to really seriously deploy large amounts of capital that I had been waiting to invest for a long time.
Yeah.
And that ended up being a great, thing in the long run. But man, it is frustrating because I don't invest in environments like these. I only trade. And that is just a personal, I'm not saying that's what you should do or shouldn't do. That's just what I do, is I only invest in long-term stocks that I like when I feel that the market is at a discount. And
Yeah.
so, if we're going to enter that frustrating third wave, I'm not necessarily like a perma loyal to the investment of semiconductors. I'm trading, right? So it's like, I think that if we enter that frenzy, semiconductors are going to kill it. There might be another wave to the AI excitement. Maybe Nvidia earnings hit it. I don't know what it is, but I know how to trade that environment, and it's kind of counterintuitive. You almost you chase in a very calculated way.
Yeah. But also look back at the statistics of if you didn't chase, you'd miss out on so many gains because
Yeah.
this
Yep.
market feeds on momentum. So if you just bought all-time highs and kept buying all-time highs, that actually proves to be a very good
I was
strategy,
saying that earlier.
right?
Yeah.
Yeah, it's so that's the hard part is if you're a trader, you hate buying highs. You hate
Yeah.
selling lows, but in this case, when it's breaking highs and breaking highs, it's that perpetual momentum that the market keeps feeding itself, and it's sentiment on top of sentiment on top of so this buy the rip culture for the last probably 15 plus years has been rewarded handsomely, and the last 2 weeks have been no different. So
And Chris, at
I'm just
some
angry.
point, it won't end well, and we both
No,
know that.
I know. It won't,
And
and that'll be a harsh reality. But it's like, but that doesn't mean that you and I have to turn into to bear doomsdayers either. It's like when
yeah,
it ends, it's going to end badly, and maybe we have a 20, 30, 40, 50% retracement, and maybe it's awful, and maybe it's so bad. But look, if that happens, we got to figure out how to trade it, And so right now, it's like it does us no good to be, tooting the bear horn when it's not
right.
going to show up.
Well,
So we
and
might as
let's
well ride
think
this
about
thing out.
something else too, Chris, just to think about this. If we can show my screen for a second, this is
Yeah.
another thought I want to ask you about. I've been thinking about this myself. Is if we go right back into when we started going into bear territory, I was watching the put
Mhm.
call ratio. Things were getting real scary, and things tanked, and the put call ratio got very high, which of course, oftentimes is a very good signal to get contrarian, to get look for that overdone moves. That ended up being a decent call, but here's the question for you: is if we flip back in, I was talking about what to do in a bear market at the time that the market looked like it was going to fall off a cliff. I was starting to
Mhm.
prep for what I'm going to do, but let's just talk theory for a second. If we see this thing flip back down and it's just blows everyone's mind, we're right back down to no demand for puts, all demand for calls, super low VIX. If that happens, I have been thinking personally about how maybe I want to shift my positioning during those environments, even though it's the painful thing to do.
Mhm.
Maybe to let go some of my tech that's working so well at that time.
Yeah.
Maybe to trail out of something and maybe get slightly more defensive, raise some more cash. Strategy for that environment might be really key, because one thing that I messed up on is during some of these signals of just overt, invincibility feeling markets, I was still super long the tech and the Nasdaq and everything, and I gave back a ton of profits when the market shifted into a higher volatility. So I'm still working to get those gains back.
Yeah.
What are your thoughts on that in terms
Yeah.
of like the environment you're in?
That's a great tool to use. I just looked at I've got a chart here on my call to put ratio as well. And
Mhm.
so down below is my line graph of the S&P. So tracking S&P performance. This is our sell off from, late July into early August.
Mhm.
Um, Same type of thing with the edge finder. If we come into where all my levels here are below zero point 0.7, usually that, we settle, I mean, look at all these levels that we settled in around like zero point 0.6, low 0.6s. That was kind of toppy in the market. We've quickly gone from that level, that was the buy the dip. But if we come back and settle right in, I mean, I'm a little less excited about
Yeah.
trying to stay with these sustained longs when I think we could have some chop. And if I go back to this chart here, um, here, I was, what we've been seeing a lot of is we're I mean, I want to say that maybe the market's going to find some type of like broadening pattern, because that's the perfect chop environment for bulls and bears, right? The market comes up here, pokes the highs, and then sells back off, and then pokes the bears, and then rips back up. That could be a perfect environment, like you and I talked about. We haven't seen really sideways
Yeah.
in since 2015, right? 2015, 16 was sideways. A broadening pattern would be the perfect level to have the bulls hurt and the bears hurt, and it just kind of chops everybody up. And then, I mean, if it blows off the tops, then there's the capitulation move we're talking about, and who knows, it can stretch to 6,000 plus. I mean, heck, I've got a fib here from this COVID low all the way up to 6,400. If we hit that level, cool. I will be technically wanting to be short the market at 64, you
Mm.
know. But I could see a broadening pattern or seeing something sideways. We have a 10% dip in the SPY. We have a 15% dip in the Qs. If you go to the futures market dropped almost 20% on the NASDAQ. The NQ
Yep.
feed was because of that big spike we had Sunday night on August 4th. That Sunday night spike was all the way down towards 20%.
I
So if
saw
we go
that.
from 0 to 20 or 0 to 10, this market might just stay sideways for a second. Um, so yeah, I mean, look, I know you and I are going to talk a lot of strategy. I mean, we're going to figure it out. And I just know for me, it's like I'll be actively trading, I'll be positioning. I'm just trying to keep things simple, man. Like, I don't know if we're going to 6,000. I don't know if we're going to come back to the lows. I just need to care less and just make sure that I just find ways to make money.
Yeah. And, the craziness in the VIX is also just something that really challenged. I think I actually would be surprised if anybody was not challenged by the last few weeks. I don't think anybody was unchallenged by this last few weeks, unless you were just, long out of the money puts, and then you just haven't traded since. But even then, if you were long out of the money puts and you didn't close them, I mean, this sink in the VIX probably killed you. So it's
Yep.
it's just a very difficult last few weeks. And if you're somebody in the audience listening and you're like, at least I'm not the only one, Chris and I have gone back and forth. It was a challenging period. I lost a lot of money very,
Yeah.
very quickly.
I had a $90,000 swing in the last 2 weeks.
I think that's about what I've got too. So
Yeah.
it's just when you get VIX changes, and the worst part about it is I preached for weeks before it happened about how be ready for VIX changes.
Yeah.
And then, it still can surprise you, even, after doing it for years.
Well, so I guess what's important now that we've experienced this, like what is the takeaway for you after seeing this type of move? Because a couple things just to put it in context, it was the second largest single day move the VIX has ever seen. It
Hmm.
was the largest, like in a 5-day window, 10-day window, it's the largest decline in percentage that the VIX has ever experienced. So
Yes.
these are not like just, oh, the VIX always does this. No, it doesn't. The VIX has
Mm-mm.
only been above 35 5 times in history. It's only been above 50 3 times in history. This is the third largest spike the VIX has ever seen. And this is the largest vol crush that we've ever seen.
Yep.
So,
Yep.
I mean, my takeaway is, as much as I want to say, well, I always need to have this running in the back of my brain, that's not really the plan, because this happens 3 or 4 times a year. What I need to do is make sure that my positions are not crazy exposed to a vol event like this. I mean, I was long the VIX, man. I was long the VIX, and I had good profits as we broke up above 20 on the VIX. When I was
Hmm.
in that trade, it's just a stupid chart now. But when I was when I was in here, I mean, I bought back in early July. I
I
was
remember.
long with a $20 call, and I was long with a 10.50 call. One was in the money, one is out of the money. I only paid like $6 for my debits, and they were trading for over like 40 bucks.
Yeah,
But
I
did I get
remember.
40 bucks out of them? No, I closed them out for like $10 net profit. And I still had a, multi-contract hedge. I made like 10 grand for everybody's account. It was a good hedge, but
You know,
it wasn't 40, $50,000, which would have been freaking great. But even it was tradable. It wasn't even tradable until like 35. I mean, I would have, because the VIX spike was Sunday night during the futures market, and it came back
yeah.
to reality opening bell around like 40.
Yep.
So it still would have been a fraction of what this reveals. But anyway, I was just asking you, like, do you change anything about your strategy? So, and maybe in your situation, maybe not, because you have like opening bell levels. But when
Mhm.
you use stop losses, Nick, do you use like market stops? Or you use limit stops?
I
I'm asking
I
because,
used market stops, which is
okay,
why the drawdown for me was so drastic, was because
yeah,
it
yeah, yeah,
opened up
okay,
and I had some bad slippage that cost me a pretty penny.
hmm,
But to answer your question, now disclaimer to everyone listening, I'm about to drop some hindsight bias when I talk about what you shoulda, coulda, woulda done.
right,
But what did I learn from this? Well, when the VIX gets down into this low 12s, it can stay there for a very long time. And it
yep,
did stay there for a very long time. And I, like most people, got very used to the 12s, the 13s on the VIX. And during that time, the market just every day floats higher and higher and higher.
hmm,
And what I think the disciplined thing to do during that time is, from an execution standpoint, nothing changes in my strategy. Fundamentally, what I'm interested in buying, what I'm interested in selling, when I buy it, when I sell it, none of that changes. What may need to be closely looked at is my position sizing and allocation to certain things. So, maybe if I'm long the S&P 500, yes, I still want to be long during low VIX periods, but maybe I need to keep a stop pretty tight. Maybe I need to, look to raise cash. Maybe I even need to look to potentially slightly hedge the portfolio with something you did with like options, uh,
right,
to buy some VIX when it seems just stupid cheap. I actually
right,
saw you and several other traders that I really like to listen to on YouTube we're talking about buying some, this is going back to the beginning of the year, people buying some out of the money calls on the VIX and just as a bit of a hedge, staying long, but then buying some VIX calls. And obviously the overnight kind of options market being closed really messed with a lot of, potential there, but
Yeah.
still,
But it
something
paid
where
out.
you just, yeah, there
Paid
was
out.
some payouts there.
Yeah.
Yeah.
Yeah, a couple things, like my VIX call options did not pay intrinsic value. So what should have been, when I closed it, I had a 1050 long, and we're trading up here around. This was highs at 19. This was our highs in the 20s. When I had like $10+ of intrinsic value, it was trading for about $8 a credit. So I paid $4. It was giving me a
Mm,
net, $8 instead of giving me like the intrinsic of 10 plus. And so that was another like little discovery of like, I don't know how valid it is to trade the VIX if you're really expecting like a full on hedge. Look, it's just a good play. But I basically got paid about 80% of what I wanted.
yeah.
So, and this was like in the market, liquid environments with all the instruments. I got paid about 80% of what I thought it should have been worth. So, taking that in consideration, there's other ways to play it. And I think, look, I'll give a shout out to Frank. Frank's play on the SVIX was brilliant because that type of volatility event, to buy the VIX or buy the SVXY, those are great ways to actually get some
Yeah.
buy instruments in where this vol crush that we saw. I mean, the SVIX has been up. I mean, I know Frank bought it like 23, but
Yep.
from, 23 to 38, just on a percentage standpoint, I mean, just
It's
talk about
insane.
any dollar amount from 23. We'll go 23 to 31. We're up 40% when we're talking about this exciting move on the S&P back up at 7 or 8%
Yeah, he told me about it.
recovery.
He walked by my desk. He's like, if we get another drive lower on the market, I'm gonna probably pick up a little SVIX. And I was like, okay, that seems like but as you just pointed out, if the SVIX goes back from the lows to the highs, again, that's a 200%
I
gain.
know, I
That's
know.
insane.
It is
So
wild. And so as far as the recovery goes, I mean, and I feel like when I talk to Frank too, I'm just like, I just take the profit. I just take the profit because he gets these great trades. I mean, if we came back to $40, I think buying
mhm,
this thing at 23 and getting out at 40 with no risk of if we're going to get back to, because look, the market's going to have to make all-time highs for this SFIX to get back to these highs at 52. Not
yep,
saying that it can't, but if there's any hesitation, I mean, I look at just the structure of this instrument. If we came back to this, 36 to $40 gap, that is an awesome move right there with little to no risk,
yeah,
right? It's just a straight line and a straight shot to these efficiency levels. And even if it was a high, low 50%, just take the profit. The market hits equilibrium. That's awesome. That's so technically obedient. It's incredible. So that's my style. Um, or move the stop loss and take a page out of your book, which is you're in profit at 23, move it to 24, 25, 26, and trail it and see if see if it wants to keep going higher. So
yep.
all sorts of ways to do it when you're in the trade and things are going well. But in the moment, I think what was frustrating is it was a Friday, and I hate like keep going to back like talk about this in hindsight, but it was a frustrating move because Thursday, Friday, the market was clearly signaling some selling, and the fact that it all happened over a weekend and a futures rip on Sunday night, it was just a wild
It
weekend.
was.
Like it was just so much so quickly, and then on top of that, to buy instantly on Monday morning and then look back and say that was your chance. Like, yes, you can participate, but it's like the best
It
trade
all
was literally
happened like it
Monday
was
in
like a
all the panic.
dream. It was like a big nightmare. Like it never
Right.
happened in the day-to-day action. It all happened like when
It,
we're all asleep.
yeah, we're
And
like getting ready for the market. It's like it already happened. So you're either in or
yeah.
you're not. Yeah.
Yeah, really, really a crazy, crazy time, and I'm sure we will think back to that for years to come. And who knows if it's over or not? Maybe we get another spike in the VIX at some point. Maybe things get drastic again, but we will have to see. Speaking of Frank, he's going to join the call in just a second. I'm going to hop off and get on with some other stuff I got to get to. But before I check out here, let me just let everybody know that if you enjoyed Chris's commentary, he has his own socials. We're going to drop the link to his chat or his channel here. You can also find him on Twitter at Real Chris Pulver. And stick around with Chris and Frank for a little bit longer. They're going to go on to talk some more fun stuff. So, Chris, thanks for coming on. You got the show from here.
All right. Thanks, Nick.
All right, see ya.
See ya. So I was just marking up this chart. I sent out a video yesterday on TradingView, and even though we had a pretty incredible directional move this week. Every day was trying to find a way to go up. This is Monday, Tuesday, Wednesday, Thursday, and today. I had a short-term trade that within the first like 30 to 60 minutes of trading typically generates a nice little profit for me. And right here, 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 and even opening bell this morning, same thing. So nice little 5 of 5 winners this week. Added some nice income to it. Took some profit with CL this morning. That's Crude Light Futures. Frank, I hear you pounding that keyboard, dude. What's up, man? How are you?
Pretty good. How are you? I didn't know it was
Good.
that loud.
It's probably not. I have super sensitive. I've got like sonar hearing with my headphones, you know.
Oh, I got you. Yeah, I'm just clicking away.
Okay.
I'm trying to pull up the NAS.
All right.
Um,
What are you looking at today? What are you liking? We have not had a chance to really go through like top down stuff. I know gold just poked some all time highs, which I'm sure some traders are interested in. It keeps testing, keeps testing, keeps testing. Gold, it like still looks attractive. I don't know if the bulls are going to get faked out. That's my biggest concern as we just keep we keep testing these highs, but are the bulls going to get faked out? Maybe. I mean, again, there's my trend line structure. If we hold that level, so be it. But the bulls are struggling to, give us a convincing break. But let's say that today's daily candle closes above 2485. That's a pretty good sign that we're breaking higher if the weekly candle closes high. But if we have a rejection where it's a long wick to the north, I would just say it's a little bit of a head fake. So just be careful on gold and getting super long. I think that, look, the chart will be there. If we, somehow break down on gold and come back to these lows, I'm still a buyer. There's long-term trend lines out here as well. I like gold a lot in the 2270 zone. Silver's cooperating nicely. Oil's had a nice little turnaround from the $72 lows. Where's my crude oil? So I got oil in here somewhere. There it is. So oil
but
is
what's kind of weird though is that the 2 year, yeah, the 2 year and stocks are moving up together. And
do you see that we're steepening a little bit? Like the 2-year got to 410 and the 10-year got to 3.9. So we were only 10 basis points off from that inverted yield curve ending. And now we're
yeah,
back up a little bit
3
steeper
months
and
though.
steeper. We're now it's 20, it's like 19, 20 basis points away. So interesting. Like we've seen a bit of disconnect between yields and bonds.
I
So
think what I
2 years coming back up.
what I think may be happening is the 2 year was dropping so hard because of the 50 basis point rate cut
Correct.
that people were expecting or
Yep.
hoping for. And then after the good economic news, they're like, oh, maybe we overreacted. Maybe it only needs to be 25. So maybe rates are coming back up in the short term because of that, because the cut's going to be less. But I don't know. It's just strange to see them moving together.
So bull steepening. This is the move that we were expecting here. Change. Oops, get out of here. Short-term interest rates falling faster than long-term, but now we're seeing that the short-term is actually rallying faster than the long-term. So the 2 year has been way more sensitive to this recent news. Which, I mean, look, all we're doing is talking about the same thing the Fed has been giving us all year, which is, hey, we think it's appropriate to cut rates. This has jumped around a lot, Frank, the last couple of weeks. We went from, I mean, if you looked at the CME watch tool, we saw at one point, it was a week ago, there was a 75 basis points cut here in like a low probability, but it was on the chart. And then we had the higher probability at 50 basis points. And then we had the lower probability at 25 basis points. That, of course, is all flipped. Now the 75 is off the table, right? The 50 is low probability, and the market's like in line with the fact we're going to have one cut in September. Now, it's still planning out here that we have a cut in September, cut in November, and cut in December. I still think November is an interesting time to do it, but doing 25 basis points each, we go out to another year. We're looking at something around like 2% in cuts over the next 12 to 15, let's say 12 to 16 months. So that's good. But I think you and I talked about this yesterday. There's a lot of news that we're still going to be able to digest. I thought it's like, well, it's pretty quiet till Jackson Hole, but there's a lot of stuff, dude. We still get through unemployment claims every week. We still get through Jackson Hole, which is next week, Thursday through Saturday. We also get through PCE at the end of the month. We kick off a non-farm payroll. I was looking at the Edge Finder this morning, and let me ask you this: do you think that the data trends are looking good for labor? If we go to inflation data, we're sticky at 2.9. If we go to employment numbers, where's my employment stuff here? Let's go labor data, NFP and unemployment claims. So we have trended slightly lower. This prints every Thursday. We've had slightly lower unemployment claims, but NFP, even from this February 2024, it's been trending lower in a big way, dude. I mean, I don't see that the market. I mean, the market got super excited these last 2 weeks with just having not crappy news print, but are we going to continue to see like good news out of the U.S.? What are your thoughts on that versus what I'm seeing here? Like trend wise, I think we're still pointing at like a struggling labor market.
I think I don't really look at NFP right now just because it's so wild. I
Okay.
just focus more on the unemployment rate.
Yep.
If that ticks higher, which
higher.
it has been,
Yep.
that's more concerning to me. I'm watching it now specifically because it's over 4%.
Mm-hmm.
Before it wasn't too much of a concern, and NFP was just all over the place. The revisions were very wild and inaccurate. So it just wasn't reliable for me, and it just caused so much volatility in the short term that I don't really want to follow that. So looking at the longer term trend of unemployment rate rising, especially that jump we had last time, was pretty concerning. So I don't think that the jobs market is necessarily getting better. I think it is cracking. And the longer we hold up above 4%, I think the worse it's going to be. So what we talked about yesterday was we're holding on to anything we can, or we're grabbing onto any good news that's out there. So unemployment claims, if they're better than, or if they're lower than expected, which is a good sign, the market takes that and runs with it. But I think we just got severely oversold in the short term, and people are just looking for any reason to get back in. But it doesn't change the fundamental aspect that the labor market is not doing well. And CPI is not doing that much better either. I mean, we're not really trending lower.
Oh, it's been 12 months sticky, man. Like 2.9 is I mean, I'll quote Shania Twain. That don't impress me much. You know, it's about the same thing. So we have unemployment rate too. It's like, so if you look at unemployment rate, it's trending higher. You look at wage growth, it's trending lower. You look at unemployment claims, it's steady. You look at non-farm, it's all over the place, but it's been trending lower since February. I mean, I question it that how much better does it get? And there's enough of it that before the September 18th meeting, and look, I don't think that any of this is going to change the Fed cutting rates. I think the worst sign, and we've all talked about this, right? The worst sign right now would be from now until the Fed cuts in September, on September 18th, the worst thing the Fed could do is cut more. Cut 25 basis points and let it do its thing, as opposed to showing the market and showing the world that you misstepped, you miscalculated, and now you're going 50 basis points. Now you're overcutting. I think that rocks the market more to the downside than it does the upside. I think that really would, like, we put a top in if the Fed's going to do anything beyond what's forecasted right now. I think 25 was what's expected. That would be like the healthy cut. It's appropriate. But if we're losing the labor market in the background and the Fed starts getting more aggressive, I think that's like that. I don't know. For the first time in a long time, it might be a failed backstop.
Yeah,
So,
but why would 25 be appropriate when inflation is still sticky? I know you were talking about the labor market.
If it's 25, look, 0 cuts are appropriate. If we want to make sure that there is a 99.99% chance that inflation doesn't rear its head again and have an uptick in inflation, which we've never done, by the way. All of our inflation in the U.S. has always had a second wave. So is this? And I was telling, I think Nick and I talked about this offline. I said, is this the first regime ever to officially squash inflation for good? And part of me thinks that it's no. Like, part of me thinks that they might want to squash inflation, thinking that it's gone down low enough, but it really hasn't. They really shouldn't cut rates at all. But if we don't cut rates, you're going to kill the consumer, because the consumer can't keep living life with debt the way that we are. I mean, our government does it, but we can't do it. We can't stretch our consumers out by another 12 to 16 months with 0 cuts, 8% financing on auto, and 7% mortgages, and refis are crazy. Like, business restructuring it's all bad.
That's very short term. If we just let this unfold, If we keep bringing back like this temporary relief, we just prolong this process. So
But
it's
that's
not
what the
like
Fed
this
does.
problem isn't going to come back again in the
But
future.
that's what's been happening, right? It's always going to be a problem. And since 2018, it's been a problem. We have booms and busts, and it's been the Fed is front and center at every up and down cycle that we've seen. And this is why I think that the Fed ultimately something breaks and the Fed has to come in and fix it. And like I said, my biggest concern is that the Fed comes in and they can't fix it. They won't fix it, or it gets way worse before it does finally like bottom out. So, look, I think the ideal thing to do would be consumers need to cut back. We need to have a contraction. We need to have a recession, and people just need to figure it out. Let the market do it, as opposed to the Fed's going to cut. Inflation's good enough, but it as you and I just said, it's really sticky, and somehow we have a wave up in inflation, and then what happens? Now we're down to, let's say, if the CME watch tool is accurate, okay, and we're talking about this same conversation September of 2025, and the Fed just continues to cut to 3%, and inflation's still at 2.7, 2.6, 2.5, 2.4, maybe 2.9. How does that look if our Fed funds rate's at 3 to 3.25 and inflation's still at 3%? Now we're right on the verge of like losing it. We're right on the I mean, so that's where things get really ugly. It's like the Fed's starting to cut, they probably will cut. And if it starts, I don't think they stop. I think they'll cut 25 basis points and they stretch it out every quarter. But I don't know, man. This is the difficulty of like how this all fundamentally plays out, and the level of confidence I have in the Fed to get this right and thread the needle. I think they can get through this year because it's an election year and it's not as disruptive. If they cut now and they cut through the election and just say we plan on doing it anyway, maybe the market's okay with it. But if something turns nasty, employment, inflation, and the Fed just keeps cutting and making things worse, I think that stagflation is a true conversation, right?
I mean, that's what
Stagflation
we're
is worst
seeing
case scenario
now.
for our economy.
That's kind of what we're seeing now. If
Yeah.
inflation continues to not move, hopefully it doesn't go higher, but what was it, like 12 months of CPI in the same range it's been?
Yeah, we've
And
been
then
sticky for a year, right around 3%. It has not budged. If we go
meanwhile,
to
unemployment trending higher, NFP ultimately lower. It's
Yep,
hard to see the trend on NFP, but
it's just down. I mean, the last 5 or 6 months it's
the
been down,
past,
right?
yeah,
Yeah,
the
it's
past
been
6 months
trending lower.
are lower, but
Yep. And most of the jobs have been government jobs, not private sector.
yeah.
So most
So
of
it's
the
not,
government jobs, yeah, it's not great. Not great. And yet,
but so short term then, looking at the NAS, we talked about this yesterday. I mean, we can trade along with the expectations that there's more confidence in the Fed cutting and seeing less of a risk off concern. But what we talked about yesterday was this major resistance zone, this 50 DMA.
uh-huh.
Um,
Yep.
See how it could be forming some sort of reversal pattern. I'm not completely confident that will happen.
Hmm.
I don't necessarily think we're going to move too much from here today. We may, but I think like this is going to be a big spot we're going to have to test and probably like sit at a while or retest. So if you're looking at the NAS for like next week or maybe a day out, would you look to be selling calls now to be doing some sort of credit spread strategy on the NAS?
Um, maybe. I think so. The way I play the Nasdaq is, like you saw me do a couple times this week. I just do some like intraday, maybe zero DT credit spreads. The Nas pays pretty well. I can get dollar 50 on some of these zero DTEs. Um, so I'm looking at the feeds are interesting, right? Like the NAS 100 versus the NDX versus the NQ feed versus the QQQ feed. Look, the Qs here. I mean, the one thing that the Nasdaq did is we broke. I mean, I don't think this is a bear trap necessarily. It's like that's a crazy bear trap if that's the case. But I mean, Frank, we can go back to this low in 2023. We can go back to the lows in. I mean, we'll go way back here. I mean, how low can we go? This is the 2020 low. So there's an outer trend line, and here would be, kind of an inner trend line, something like that. So I mean, there's still some semblance of the market stabilizing like this. This is a 2022 low. Then we had the April correction, our October 23 rip, and then we had our April low here. So in a way, maybe that 200 EMA on the higher time frame is good enough. But could this be an ominous like topping pattern? Maybe. But the bears would have to take it out here, dude. And this is the thing is I can't be super bearish without having way more confirmation. And even if it's super bearish, it's not going to be an easy bear market. I mean, it's going to do something where it's down and it rips and it's down and it rips and maybe it drops a ton and it capitulates and then it bottoms out. And ultimately, we're trying to look at value opportunities to buy low. But if I go to the short term on, let's say, NDX, okay, like right now on the daily, I would love to see some broken wing butterflies like you and I talked about yesterday. If I looked at a broken wing and tried to pin some price in here or pin some price in here, I did get filled on a trade yesterday at the highs, and I want to take a look at this one because I think I'm just going to get out of this trade. They're 100 points wide; it's way too much risk. And let me show you this one here. So this trade is trading for around 545, but let me show you this trade. So right now, this is a broken wing butterfly at the highs. This is just above the all-time highs at 21,000. Okay, so if we go NDX 21,000, let me put a marker on here. So 21,000 is here. Okay, so if this NASDAQ rips over the next 40 some days, 45 days, if this NASDAQ gets up almost just we'll say 7.8%, I'll just be right to the number. If we go up 7.8%, my position is toast. And
you're doing it 45 days.
Yeah.
That seems like not a lot of time, or it seems like a lot of time for.
Is it though? So why?
Well, we went 12% from the lows in like the past 14 days.
I understand, but I'm also thinking about the market seasonality of how bullish is September and how bullish is October.
That's
usually
true.
not very bullish. That's the like my bear plays to me are based on seasonality. So if we're going to see some tax loss harvesting, if we're going to see some pausing, having this ridiculous rip like we saw, great. But if we hesitate a little bit, I could take this trade. Now, here are my thoughts. So I like the trade for what it is. It's a $500 credit. It's a broken wing butterfly. It looks like this with a call side. So if price stays where it is, I have this credit, I have my bull trap, and I have my risk. The problem is that this trade for $5, this max profit for, I can check my P&L here. What's my max profit if I take that trade? My max profit's around 10 grand, but my risk is $9,500. That's a little steep. Because it's 100 points wide, that's way too much risk for me to take. And so right now I'm trading it for, I got in for $5, it's trading for about 550 to 580. I'm just going to go ahead and close this trade down. I think it's good in theory, but I need these numbers to get way tighter. I don't like the NDX at 100 points wide because a broken wing is 100 point spread plus the 200 point spread. That's way too much risk. Even though it only tied up a tiny amount of buying power, this is a trade that I don't want to be in because if I'm wrong, dude, that's like, I don't want that loss at all. I want, because I can't defend this. I can't, there's no plan B with a broken wing butterfly. It either makes money, it traps my profit, or it doesn't. But that's way too much risk. So I'm going to go ahead today and see if I can. I took the trade yesterday. It filled yesterday. It was pending on Monday. And so it filled. I'm going to go ahead and put this in at like a 5. Let me see if I get maybe I get 550 or less. So bring up a chart. And if you want to, let's chat about something else. But I like the trade, right? I really do like the trade. The problem is that's way too much risk for me to take. Although I will say that I really think I'm right. I really think I'm right on the trade that if I kept it there, I'd probably make $500 and be happy, but I can't afford to make, $500 and also be willing to risk $9,500. That's stupid because what I can do is tighten that up, take a trade for $1,000, make $200-300 with way more probability, have way less loss, and, just kind of grind through the next couple of months. So
yeah,
anyway, that's where I'm at.
I think finding the top that far out is kind of tricky. But
sure, but that's why I did it September, because if we have Jackson Hole, if we go into September, we see Mark, the news just isn't that great. But at the same time, like I said, for me, I just can't take that risk. So I'm gonna just eat the small loss at 40, 50 cents, take a $50 loss is no big deal. But going out that far, it's not that far, right? Like it 30 to 45 days is not that far. Going out a year is far, right? Going out a day, it's like, I know you do a lot of short-term trades, and they've worked out really well. I just thought the only reason I'm willing to go out to September is its seasonality. How often are we finding all-time highs and grinds in September? If I could quickly go back at like any September in the market, I don't know how many Septembers we're going to see where the market's going higher. Thoughts on that? Like, are we at all-time highs in September most of the time? Probably not. If anything, that's like it's September effect for a reason. We don't really see good movement in Septembers. So let me bring a few examples up. So go ahead.
I can't say for sure. It's just
I want to look. So let's bring up what else do you have? So by the way, what do you have on your charts when you keep bringing up your when you brought up the NAS and you have those? Is that an ATR band that you have above and below, or is that a Bollinger?
It's
what is that?
Bollinger Bands, basically.
Okay, got it. All right. And
so
how you
this
like that a lot in the daily?
Yeah. 100. Yeah.
Okay.
So I mean, it tends to work. It works better on the downside when you're looking at the market. So I would say that, I mean, we still have room to go. Not that I want it to go higher necessarily, but I think that it's obviously historically not a good month, but I just don't know. After seeing this, unless we take out the lows again, I don't know. We're still in this, we're like in the dead center
Right.
of this recovery phase. I know I don't like upside. I don't want to see it go up to the highs and then breach higher, but I can't act like that's not going to happen when it very well could. So I might just be trading slight, taking these small positions to the upside and then taking even smaller, out of the money puts like I've been doing, because it seems to be working so far. If we rip higher, then I can get out of my trade, won't have to buy more puts. If we drift higher towards the end of the week, so be it. I'll make some money there. So I think that's just what I'm gonna do. I don't know if I want to sell options unless I'm, say, a week out and I'm at the all-time highs. But even then, that would be like probably 13 cents or something, and then you'd be risking the rest of that.
Right.
I don't know.
Okay. I am closing out for a 60-cent loss, and the fills are actually a little bit better. So I'm losing 50 cents in the trade, which brings nothing into play. Like, that's so much more manageable than like, okay, I'll deal with it. Versus the other ones are way more defined. Like my max risk is like $700 or $800 versus $9,000. That would be, I'd be pissed at myself if I let that happen. That's like a 3 to 4% move. So no thanks to that. All right, I've got two more accounts to close out. 550 loss, which is fine. And I will take the trade again, Frank. If I see the numbers change where they're not 100 points wide, I will take the trade again for September. In fact, I could probably look out one more week and see. But let me do this. Let me close out this last position here. 1, 2, 3. Close this one out and take it for hopefully 550 or less. Okay, so that trade's done at 549. I got it filled at 5, so I lost 50 cents in the trade. No big deal. That's one contract. I'll take the small loss. Okay. I like the trade, but I don't like the legs at 100 points wide. So let me go to, we've got September 30th. Let's go September 27th. Curious what that date is. September 27th is a Tuesday on NDX. If I looked at 21,000, I'll do the exact same trade. So I'm going to do a call butterfly. And now I should have, I've got 25 point wide. That's totally different. So I'm going to do the same thing and pin it at 2,100. So 2,100 is going to be my pin price. So keep going down here, 2,100. So pin, did I say 20? Hang on a second, 21 or 20? Yeah, 21,000. So I'm going to move these. Yeah, move these way down. All right, so 21,000. This is further out of the money. There we go. Almost there. All right, so if I sell the 21, 25 points wide, 50 points wide. Okay, I'm going to take this trade right here, dude. So this one is about a 1% risk, max loss. We're a little bit earlier in the expiration. Now it's only 42 days out. If I get $2, I'm going to try to take this trade. I mean, 2 and change is okay. We're at an 86% chance of profit. I'll do this. If I'm 25 points wide, let me see what a third of that width is. So 25 times 0.33, 825. There's no way that's going to, I'll, if we go up a little bit, I'm going to put this in for, I'm going to try another $5 fill on this one. I'll do the same trade. I'm going to go after just less than a third of the width of the I guess it'd be the bear call spread. And then I have a bull put spread on top of that. So my max loss is around 1%. My profit trap is over 1%. My credit collected would be decent. Probability of profit's okay. Try to get filled a little bit higher. This is September 27th. The numbers just change a lot for me. So I'll take this trade. And we'd have to go up 8% over the next 42 days, which I'm not saying that we cannot. But actually, you know what? Fudge it. I'm not going to take the trade. Okay, sorry. The reason why it's like, okay, well, let's just say this
build up.
Let's say that the market is stupid, right? Let's say the market's stupid and we blast this top and we blast this bottom. As I said with Nick earlier, like maybe we have a broadening pattern where this is a bull trap and a bear trap, and this market just gives us a lot of volatility over the next 30 to 60 days. I mean, dude, I don't know. I mean, I don't know if the market's going to blast it up here, but am I willing to risk 1%? I mean, sure, but if I'm wrong, I'd be annoyed when I could just be long in a trade that looks like this. Remember talking about this? I like this trade where I have a profit peak, little dead zone, and a profit peak. Remember that trade?
Yeah.
I'm bringing back the oldie but a goodie. I'm bringing back this trade where my dead zone here is going to be about it's going to be about 50 points wide and 50 points wide. So if we're in the middle, I'm going to try to center this trade.
Wasn't it like 10 different contract or
8,
10
yeah,
legs?
It's 8. It's 8. Yeah, it's 8.
Yeah, so a lot to keep track of.
It is, but if I take all of them, so here's the nice thing. I've got calls here and I've got puts here. And so there's 4 on each side. So once I put in the trade, let's say that this trade cost me $10. Let's say this cost me $10. Well, if I put my $10 in, the odds of losing a full $10 is slim to none on one side or the other. There's always going to be some type of preservation of value here. But my profit target is if I'm taking this for a $20 debit, okay, a $20 debit, if I can close this thing out for $22.50, $25, those are realistic and very high probability profit targets that I can do this routinely every week. And so all I have to do is take the trade and set the $22 to $25 profit target. Or I can just set one at maybe, 15. If I set a $15 take profit here, this one's going to preserve some value. So I can still have like 15 in credit and then maybe have like 6 in credit. And so I close them both out and I get a $21 net position. I can make some profit. So I'm going to revisit. I've got a bunch of videos on this that I've done over the last like 12 months. And I'm just going to revisit exactly how I want to construct the trade. I'm going to go back and do some testing on it over the weekend. And so I'm going to come back and see, like, I know it's a lot to manage. The reason I didn't do this trade every week is because I do have a lot of accounts to manage. I do have all these positions where it's like, oh my gosh, dude, 4 trades here, watching the calls, watching the puts. But at the end of the day, it's not that price sensitive. If I set it in limits, it's not that price sensitive, right? If my limits get hit, it's fine. But also it makes it easier if all I'm doing on the SPX or the NDX is this type of trade, then it's just a trade that I have to monitor, And also when I look at it from a we can build one out. Let me do this. If I build out one on a risk graph, I'll show you this. Are we good on time?
We are a little over time.
Oh, fudge, man. Dude, every day this week we've been just flying through our session. All right.
Yeah.
Boo.
Had a lot to talk about.
Okay, so we'll come back and revisit this. I will show you what this looks like next week. I do love this trade. Like I said, let me do some homework on mine over the weekend. Figure out how I want to construct it. I think I'm going to take this mostly on the SPX. NDX is still really good, but it depends on what I pay for it. So yeah, I'll come back, and this will probably be a trade that we start talking more about next week. So, all right. Thanks,
Okay.
man.
Sounds
I
good.
think we should just hang out today. I mean, it's Friday, right?
Yep.
I'm so happy it's Friday. All right. Enjoy your
You
Friday
said you
during
want
the
to
weekend.
hang out today?
Yeah, let's hang out, dude. Let me, I'll just fly to Atlanta. I'm gonna see you in a couple
Me
weeks
too.
anyway.
Yeah.
Yeah. All right. I'll see you in a couple weeks.
Yeah.
I'll see
Excited
you
for
Monday.
that.
Hey, by the way, real quick, you guys want to play some golf?
Okay.
I'll be in town on Saturday. You want to play some golf? Spread around the
I'm
office.
definitely down.
All right. Let's see who's
I'm going to be
interested.
really bad, but I'm down.
It doesn't matter. It doesn't matter. It's just fun. It'll be fun. Yes. All right.
Okay.
Cool.
Well,
All right.
sounds good.
Thanks. All right. Thanks, everybody. See ya.
If you're someone
See ya.
watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
What's going on, everybody? Just got done watching Chris and Frank. It's always a little funny trying to follow them up. Chris is such a thorough analyst and trader that it's like, I like my approach, but sometimes I hear his approach. I'm like, damn, this dude is like, he's grinding. Excuse me for saying. Anyways, it's always really cool to watch them. Cool to see kind of some of the data and information that they take into account when it comes to their trades. My plan today is do something basically just a little different, where I simply just go through a assortment of charts and try to create some biases for some potential opportunities. I don't plan to actually take any of these trades that I'm going to be identifying, simply because my the way I approach the market is very specific. I wait for a piece of economic data to hit the market, and then I try to capture out of that data. So let's just jump into some things real quick. Looking at the Doxy, as I'm going through this stuff, I'm not going to take, yeah, no problem, Chris. I'm not going to take any fundamental let's see, let's get into this. Just do a little Friday technical analysis as we're wrapping up the week and the show here. So Doxy is obviously at some major daily support here at this 102.5 level. Now, there's a couple things I could see happening here. Let's actually expand this out to maybe like having this as a range. Now, I mentioned this on Wednesday, I think, on the show. Because of our lack of real data until next week, I think next week we have some PMI information. Yeah. Manufacturing, flash PMIs, meeting minutes. Jackson Hole Symposium is next weekend, which is going to be interesting. I'm interested. I've never watched this, so it should be interesting to see if we can watch it. I don't even know if we can watch it. But with the lack of real data coming through next week, I could see Monday and Tuesday being dud days. Even if they move maybe a little bit, let's say market closes here today, consolidate Monday, consolidate Tuesday, consolidate Wednesday, and then maybe Thursday's PMIs give us an opportunity to take the dollar higher or take the dollar lower. I could see that happening. The markets really don't have that much to look forward to next week aside from PMIs. So if you look here, let's see. This is a prime example of July. So at the end of July, this was NFP day, I believe. Yes, NFP day was on the 5th. We saw the markets kind of consolidate a little bit Monday and Tuesday, and then we got CPI that Thursday. and the markets fell. And then we had a couple weeks of basically nothing, no data, no information coming out of the US, and the market stalled again. And then we get the NFP day, follow up to NFP, consolidation, CPI, or no, this was PPI day on Tuesday, and then CPI day, as expected data, kind of for the most part. We had a little bit of a slightly lower than the projection on CPI, inflation rate year over year, came out to 2.9. The consensus was 3, and the bank range figures, let me see if I can pull these up real quick. So the data for the CPI year over year came out at 2.9. The range was 2.9 to 3.1, the highs and lows from the bank ranges here. And so while this was cooler than the forecasted median, it wasn't a surprise to the market. So we saw the markets kind of take that CPI in stride and not really care about it too much. So anyways, this is what I would be looking for next week. We can see a bit of a range here. Top of the range, already got the bottom of the range marked up. If we were to break above this area, some of that retail sales information coming into play. We got pretty warm retail sales yesterday. If the markets take a hold of that going into next week and we push up above this area, use it as, previous resistance now becomes support. This is a very drastic line to the upside. I don't necessarily see that happening. I think we could pop back up into this area here. Kind of like to take some of the most recent price action legs out of this area. So what was the most recent little pullback before a major drop? It was this leg right here, this little push up. So I could see us tapping into this zone. I know we've come down significantly on the Doxy, but I'm still not a bull. I'm very much a dollar bear at this point. I do think there's room for a bit of a relief rally is kind of what I like to refer to it as. Bit of a relief rally from some of this hard press selling. I think that's viable. This little double bottom pattern we have here, if we get the neckline break, retest, push up into here, again, it's not gonna this type of movement does not turn me into a dollar bear or a dollar bull whatsoever. Quite the opposite, actually. I'll be looking to sell. This would be an ideal selling area for me. If price comes up into this zone at around 104 to 105, this whole area here is a great selling zone. It's like a little shoot box for me, a target range where if we see price go up in there, I would love to trade it out of there. So I'll show you the two areas that I would love to trade the dollar out of. First area is going to be here. Would love to sell the dollar out of this zone. If we don't get that, if the dollar never gives us that relief rally back up into that area, then quite simply, I would like to trade it out of this zone moving down. And preferably something like this, where we break out of this area, tap back into it, simple break and retest to go down to 100 flat or 100.5. see. Yeah, I think that 100 level for me personally is a much stronger psychological level. Once we hit that, it's going to be tough to decide, make a determination about where we're going from there, because all these different things are going to come into play. One of the issues that for me, kind of a bit of like a storm, a perfect storm scenario happening where we have the markets pricing in rate cuts coming. Retail sales have now jumped up. The election is in November. Let's say we get cuts in September and we get cuts in November. My concern, and I think a lot of people share this concern, when it comes to the outlook for the dollar and kind of the outlook of the potential scenario, they aggressively cut rates in September, November, will go all the way through December. A resurgence of access to liquidity at cheaper prices for consumers and commercial entities. The concern is that it will shoot inflation through the roof, similar to what I know of the situation that we had in the 70s and 80s, which was, the Fed moved too fast on cutting rates. And when they did that, the idea of cutting rates is to expand the economy, encourage economic activity. I know me personally, everybody I talk to, this is, I believe this is anecdotal. This is an anecdotal example, but most of the people that I talk to, they're waiting to buy houses for interest rates to drop. That's the general consensus among most of the people that I talk to right now. Even I have a couple people that I know they have been real estate investors for close to a decade. They are not purchasing anything right now due to interest rates. And so if we get significant cuts in interest rates, my concern is that we're going to have such a resurgence of economic activity that this, we could hit the 100 level before that happens. Absolutely. I think that's a possibility. And then stay there. And then we get the cuts as we're hitting 100. And then as we hit 100 and we get the cuts, we get a resurgence of economic activity. Inflation shoots back up, and or inflation expectations. And then inflation shoots back up. And then we have a resurgence of the dollar from 100. I've been calling for dollar sells since right up in here, right around the 106 area. But now that we've had all this selling activity, I don't know how much farther we can go here realistically before hitting a big major area of support for the dollar. So it's going to be interesting trying to navigate that on a larger time scale. For me personally, that's part of the reason why I trade the way I trade, is because I'm only in and out on these little micro movements. Some of this bigger stuff is a little more difficult to judge. But as of now, still a doxy bear. I'll go ahead and flag this red so that you guys know I'm a doxy bear. Even if we get this relief rally. So this is kill zone 1. Want to sell it out of here, and then I wouldn't mind selling it out of this area if we break and retest here. All right, moving on. Let's go to New Zealand. New Zealand, the surprise rate cut this week. Is it enough to continue to see the New Zealand dollar sell off? I think so. And actually, this is a fantastic area to be selling it from. Let's see if we have anything for New Zealand coming up next week. Nothing for New Zealand dollar next week. What about the next week? Nothing for them for quite a while. Let me double check my calendar. Yeah, we don't have anything from New Zealand until September 18th. This is where I don't tend to trade like this, but I will be looking at New Zealand dollar. I'll be looking at New Zealand dollar weakness until we get GDP information. Until we get new information that changes the idea, either GDP or the Reserve Bank of New Zealand comes out and says something has changed on their end. So with that in mind, for me to continue to sell the New Zealand dollar, I'll be looking for pieces of economic data out of the US that give us a stronger US dollar, because this New Zealand dollar futures pair, it's the same thing as NZD USD. So when we get strong dollar, weak New Zealand dollar, we get strong dollar data, I'll be selling NZD all day long. I wish I had a bit more conviction to just take technical only trades without a fundamental catalyst, because this would be a prime area for me to start selling it from, and I would even be willing to let it pop up here and kind of give us a bit of a secondary, I guess, bull trap. I would maybe consider this a bit of a bull trap here. Shoulder, head, right shoulder, bull trap, maybe a secondary trap to break this shoulder, and then a fall off to the downside. All right, moving on. Yen. I haven't looked at the yen all week. I love what's happening with the yen. I'm not quite ready to get involved with it. This scenario that's happening for the yen right now is something that I was looking for back in here, back in February. I was looking for this yen rally as we were hitting this bit of support back in February. We were also, the markets were ahead of this, anticipating the Bank of Japan to leave negative interest rate territory, blah, blah, blah. The dollar at the time was considering multiple rate cuts for this year. And so I was looking at yen strength, dollar weakness, perfect trade to the upside. Didn't end up playing out that way until last month. But now that we are in this direction, I would like to see it continue to go this way. And on the flip side of NZD USD, if I'm looking at NZD USD for dollar strength to sell off New Zealand dollar, dollar weakness will have me buying the yen. So that's basically going to be my approach for the coming weeks. For every piece of US economic data that we get, if we get strong dollar, I'll be selling the New Zealand dollar. If we get weak dollar, I'll be buying the yen. And that's basically the way that I'm going to approach all the data releases coming up. I like both of these currencies, how they're positioned against the dollar currently. Could change. Things could change if one of these other currencies has something major hit their economy that, let's say Asia session happens on a Tuesday and we get significant weakness out of the Australian dollar. And then on that Wednesday, we get a piece of really strong US dollar data. Well, then I'll just sell the Australian dollar instead of the New Zealand dollar that day. But for the most part, my baseline is New Zealand dollar sells, Japanese yen buys. Sir, I don't want to mess up your name. Somebody asked me to check USD JPY. So essentially what I just checked with Japanese yen futures, but we'll just take a look at it from the opposite side. So UJ is basically the exact opposite of Japanese yen futures. It's just UJ instead of JU. So again, I'll be looking for opportunities to sell this I'll be buying the Japanese yen futures contracts, but it's essentially the exact same thing as selling UJ. So I'll be looking to sell this out of here. What is this? Data issue. Hopefully we're relatively up to date here with this pricing. Yeah, so UJ for me, it's a sell all day at this point. I don't think the retail sales figure that we got yesterday is enough to fade all of the expectations that the market's baking in for the US dollar coming up. It was a pretty good, a strong print out of retail sales, but I think it kind of made its mark, and then the markets have almost faded the entire move. So this is where the data dropped for UJ in this candlestick. We've almost recovered the entirety of the retail sales pricing. Recovered about 80% of the move. I don't want to say that the markets have discounted retail sales entirely because they recovered 80% of the move, but it's definitely it makes me think that while retail sales was important and it did obviously temporarily challenge some of the dovishness of the market, this amount of recovery immediately after, going into the day after, it kind of communicates to me that the markets took the data, processed the data, realized they didn't care as much about the data as they thought. We'll see how price develops going into next week. It could completely fade the fade. It could rally up beyond this, but I could see it falling from this area. I could see next week price doing this, hanging out until Thursday, and then on Thursday maybe dropping, maybe popping, depending on how the data hits the market. All right, USD CHF and then gold. USD CHF, I have a very similar outlook as I do with Japanese yen, except I don't have the information in front of me right now, and it would take me a second to dig through it. The fundamentals may be slightly different for me here. I don't pay attention to the Swiss franc as much as I pay attention to stuff like the Australian dollar, the New Zealand dollar, and obviously the US dollar. It's kind of the way that I approach the currencies. Is I have like my main focus, US dollar, all day long, New York session, best pair for me to, or best currency for me to pay attention to. And then beyond that, it goes Australian dollar. I like the Australian dollar and the New Zealand dollar's antithesis to the dollar in their risk sentiment stances. It makes trading AUD USD or NZD USD really simple when we have some sort of a geopolitical tension hit the market. It's super simple. Most of the time. Times like, I think it was last week when the recession fears hit the market. Was it last week or the week before with the jobs? I think it was the week before with the jobs numbers. When recession fears hit the market the way they did, the safe haven currency pairs were actually the ones performing better than the risk assets. So interesting development there, but Swiss actually went super strong following the jobs report. So did the yen. Both of these currencies took those recessionary fears, and the yen and the Swiss pop to the upside. It's easier to see it, I guess, when you look at it like this. Swiss Jobs report on Friday, August 2nd, rally. Yen jobs report August 2nd, rally. They rallied off the back of the jobs report. If you go look at equities too, equities fell. The recessionary fears then triggered the safe haven flows, but the Doxy didn't do that. The Doxy, this is what made trading this a little tricky for me personally, is because I was slightly concerned the entire time that the Doxy was going to start picking up safe haven flows, but it didn't. So anyways, back to USD CHF. Again, very similar to USD JPY. Fundamentals aside, let me just clarify that because I don't have the information in front of me right now. But again, I'll be looking for downside on this. Now, whether or not that downside comes from the current levels, a little tough to say. If price action starts to develop in a way where tries to rally, fails, tries to rally, fails, tries to rally, fails, or somewhere in this area where it's trying to rally multiple times and fails multiple times, that's sort of the way that I look to get in on some technical only entries if I have also a fundamental bias behind it. So I could see it happening from here, right? This trying to rally, tries to rally, fails, maybe getting in on this leg here. Or I could see the exact same thing happening here. We have a successful rally beyond this area of resistance. We come back into sort of this. We got price action in here, price action in here, all of this price action in this zone. So the 88 to 89 range. I could see the same thing happening here. So price rallies up into this area, tries to rally some more, fails, tries to rally some more, fails, tries to rally some more, fails, and then take a sell from the downside or from up here, sell to the downside from up there. Some of my ideal scenarios for the Swiss, USD Swiss, simply because I am very much a dollar bear right now. Euro JPY. I'll touch on it on a technical basis simply because I don't even watch the other currency pairs anymore. Like, I only watch US pairs really because I trade futures currencies. So I'll touch on this, but just know that it's not coming from a place of like a real thorough, like I haven't looked at Euro JPY in weeks, if not months. So I have zero idea what's going on this chart right now. Big fall off since July here. Oh, I'm sorry. Somebody asked me about gold. I will touch on gold after Euro JPY. Let me go ahead and I'm going to gold right after this. Okay, so on a technical basis, looking at the daily, I would be looking for sells. You've got some decent traffic here. If price rallies all the way back up to there, it's going to be tough. Let me see. Is that about 50? We just go to candlestick bodies. So this is why I think this is an important area for price. If you see, we have, well, first we got price action in this area, big wick out of this area, support, support, support. Price drops down through this area, fights here, becomes resistance, pops down to the downside. So sort of this whole little wick area, wick, 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 wick. I could see this being a good area to sell it from. I could also see this being an area where price sells off from, sort of this 1064 to 1065 zone. Previous resistance, resistance becomes support, fails as support, possibly picks back up as resistance. So a sell out of here or a sell out of here. That's on a daily time frame. If we're looking anything lower than that, which ironically, both of these zones end up being part of this most recent leg here. If price is trending to the downside, here's that most recent leg. Price coming back up into it, I think, is a realistic opportunity. All right, gold. I mean, gold is just, it's one of those things where it's just in no man's land to the upside. There's like, I know people have targets and people are, giving round numbers. You've been hearing it online, been hearing it, everywhere. It's just, some people say gold's headed to 3. Some people say it's headed to 750. I think I saw some analysts calling for 4 or 5. There's no reason to fight price action, right? So if gold is rallying, there's no reason to sell it just because it's at these highs. But it's also difficult for me to justify buying at these highs. Like if I was to want to get involved in gold on a swing trade basis, or even an intraday basis for like the whole day, I don't know that I'd be wanting to get involved here. Obviously the better places to get involved were down in here, on Wednesday. Last week was obviously some good area for gold. You were at these support areas here at 23.8 ish. 2380, but you're here at the highs. So for me, this is one of those charts where I'm not even going to bother looking at it until we get some more structure, some more idea of where we're going to go. If gun to my head, choose a direction, I'm going with the crowd and we're buying this. I'm going with the market. I'm not going to fight this. It's tough to think about it this way, but it's almost the antithesis of trying to catch a falling knife, right? Like I'm not going to sell it from here just because we've rallied to these highs and we've tapped into them a couple of times. Certainly not a reason to sell for me. So I'm not going to try to, catch that falling knife. That's sort of, if you guys don't know what that means, it's when you have a, prices falling to the downside massively and people are trying to buy it at multiple different levels and getting stopped out the whole way just because they think, oh, price dropped drastically, it has to go back up from here. It's like you don't really know that. Same thing with gold sells. There's probably a ton of retail traders trying to sell this right now because it's tapped into these highs and they're like, oh yeah, it's definitely selling off from here. But gold is a tough one. I don't like to get involved at all-time highs. It's like, you have a dream car, you consider buying it when it's only on the market for $230,000. We'll just pretend. And then you don't buy it, and then it goes up to $250,000, and you're like, oh, well, should I buy it now? It's like the price just went up. I'd rather buy when the price goes down. So for me, definitely not interested in gold at all. We're still kind of just doing this channel thing. Oh, that's not what I wanted to see. Fundamentally, I think there's a case for stronger gold. There's a lot of uncertainty right now. But yeah, this one's tough. I would say a really strong break above this channel, a significant break above this channel and a retest, I could see 3,000, 100%. Stefan, I don't want to mess your name up, but we got a very strong break above this, a decent retest of this area, and a strong rejection of this channel. Absolutely, I could see 2,750, 3,000 for sure, especially if the market, goes to try to seek out those round psychological levels. But anything beyond a very strong push out of this area, I don't know. Again, it's tough. You don't necessarily want to sell it just because it's at the top of this channel. Might not be a bad idea. But it's one of those things where it's like, I don't know. I tend to only get involved in gold in times of geopolitical turmoil. It's kind of my highest probability opportunities on gold is, Israel attacked Hamas, or Hamas attacked Israel, like that kicked off the war last October. Boom, perfect opportunity to buy up. Putin invades Russia. Boom, perfectly good opportunity to buy gold up. A new war brewing in the Middle East. Somebody takes the first major offensive attack. Perfect opportunity to buy gold up from that. Other than that, though, I tend to not trade gold. All right, guys. I'm gonna go ahead and call it here. Unless you guys have any other questions, I'll give you like a minute or two to post a question. All right, nothing. All right, guys. I hope you guys have a great weekend from all of us here at A1 Trading. Safe trading, and we will see you on the next one. Bye-bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.